Global economic news for today. Morgan Stanley Midyear Outlook identifies artificial intelligence spending versus energy shocks as key growth axes. Morgan Stanley released its investment outlook, highlighting that heavy capital expenditure in artificial intelligence infrastructure and robust high-income consumer spending are keeping United States markets highly resilient. However, analysts noted that the persistent fallout from recent Middle East logistics shocks continues to generate substantial downside uncertainty. World Bank drops global growth projection to 2.5%, warning of stubborn income disparities. The World Bank's Global Economic Prospects report has formally projected global gross domestic product growth to slow to 2.5% for the year, hitting its lowest baseline trajectory since the pandemic era. The report notes that sticky inflationary headwinds from shipping and energy disruptions are pushing developing economies further away from closing the structural income gap. Sovereign bond yields surge across developed market economies, signaling a higher for longer era. A coordinated analysis indicates that sovereign bond yields in major advanced economies have climbed significantly, reversing the post-pandemic normalization trend. In the United States, headline inflation tracking near 4.2% has solidified expectations that monetary policy will remain highly restrictive well into next year. Joint Open Market Committee decides to maintain target range for federal funds rate. The Federal Reserve announced its decision to keep the benchmark federal funds rate steady between 3.5% and 3.75%. While noting solid productivity growth and capital investment, policymakers emphasized that inflation remains elevated relative to their 2% long-term goal. United States technology media landscapes reshaped by historic $22 billion Fox acquisition of Roku. In a massive consolidation for the streaming and broadcast sectors, Fox Corporation agreed to acquire the connected television platform Roku for $22 billion. The all-cash and stock deal represents one of the largest media mergers of the year, intending to position the combined entity as a dominant force in television viewing. Global energy markets react to easing tensions as crude prices decline on ceasefire progress. West Texas Intermediate crude slipped below $74 before settling above $76, while global benchmark Brent crude settled near $80 a barrel. The price drops follow an interim United States and Iran ceasefire that has begun allowing tankers to safely resume transit through critical maritime supply routes. International Monetary Fund assessment highlights long-term impact of rising United States tariffs. A newly published working paper detailed the widespread economic fallout of sweeping tariff increases enacted by the United States administration on global imports. The modeling exercises suggest that trade-exposed developing nations are experiencing varying degrees of real gross domestic product losses due to direct export exposure. New Federal Reserve leadership focuses on price stability amid sticky core inflation. Federal Reserve Chairman Kevin Warsh presided over his first policy meeting since taking helm of the United States Central Bank, vowing to aggressively restore price stability. The policy statement indicated growing internal support for potential interest rate hikes later this year to combat lingering inflationary risks. Singapore rebounds to top global competitiveness ranking as Switzerland slips to third. Singapore reclaimed the first-place position in the World Competitiveness Ranking, driven by stellar business efficiency and robust digital infrastructure. Conversely, Switzerland lost its top spot and dropped to third place as high United States trade tariffs and a strong Swiss franc hindered international investment flows. Consumer confidence buffeted by sticky grocery and residential rental costs, the Consumer Sentiment Index fell significantly, highlighting a stark divergence between corporate market performance and everyday consumer reality. Even as nominal retail sales showed minor gains, unyielding costs for baseline necessities continue to actively drain personal savings rates. Corporate real estate portfolios shift toward warehouse assets as office refinancing stalls, reflecting broader asset class trends monitored across transatlantic hubs. Institutional real estate funds are reporting a freeze in traditional office developments. With borrowing costs hovering at multi-year highs and corporate office occupancy stabilizing below historical baselines, asset managers are liquidating office footprints to fund automated logistics centers. Global logistics shipping rates rise as dry bulk freight demand surges, The dry bulk freight index rose more than 2%, hitting a seasonal peak due to intensifying demand for large commodity transport vessels. The sudden surge in shipping rates reflects a broader global push by industrial manufacturers to front-load raw materials ahead of anticipated trade disruptions. Indian equities fall over 1.5% on broad-based tech profit-taking. The Bombay Stock Exchange Sensitive Index dropped 600 points as institutional investors locked in gains ahead of upcoming Western central bank policy decisions. Thank you for your attention.